Good morning. നമുക്ക് ഇന്ന് കോമേഴ്സിൽ എംകോമിൽ നമ്മുടെ സബ്ജക്ട് അഡ്വാൻസ് കോസ്റ്റ് അക്കൗണ്ടിങ് ആണ്. അതിൽ നമ്മുടെ ടോപ്പിക് റീകൺസിലേഷൻ ഓഫ് കോസ്റ്റ് ആൻഡ് ഫിനാൻസ് അക്കൗണ്ടിങ് പാർട്ട് 2 ആണ്. നമ്മൾ 2 ദിവസം മുന്നേ നമ്മുടെ ഡോക്ടർ ആന്റണി ജോസഫ് സാറ് നമ്മളൊരു സെഷൻ എടുത്തായിരുന്നു. നമുക്ക് അതിന്റെ തുടർച്ചയാണ്. സാറ് നമ്മളത് ഒരുപാട് റിച്ച് എക്സ്പീരിയൻസ് ഉള്ള വ്യക്തിയാണ്. 1995 സാറ് ജോയിൻ ചെയ്തത്. സാറ് HOD ആയിരുന്നു. സാറ് സെയിന്റ് ബർക്ക്നർ കോളേജ് ചങ്ങനാശ്ശേരിയിൽ വർക്ക് ചെയ്യുകയാണ്. സാറേ കേൾക്കുന്നുണ്ടോ സാർ?
Okay.
സാർ നമ്മൾ സ്റ്റാർട്ട് ചെയ്യാം സാർ.
Okay. Good morning, my support team from ASAP and my dear student friends. We have discussed the theoretical background of reconciliation of cost and financial accounts yesterday morning. We have to recollect our memory before going into the problems of reconciliation. You remember what we have discussed yesterday. We have started from the dictionary meaning of reconcile. And then we have discussed about the need for cost and financial accounts. I have told you that that's a 2 marks question. That may be a 2 marks question. Then we have discussed in detail the causes of mismatch or difference between the profits disclosed by cost accounts and that of financial accounts. That again we have to recollect. What are you think about it? What are the reasons for creating difference between profits as per cost accounts and financial accounts? First thing we have discussed was the under or over absorption of overhead. You remember? Under or over absorption of overhead. In case of the overheads charged in the cost accounts will be more than that in financial accounts. Naturally, the profit disclosed accounts will be less. Remember, when there is over absorption, overhead charged in the cost account will be more. Naturally, the profit will be less in cost accounts. Okay? In case of under absorption, we are charging less than the actual which is recorded in financial books. So naturally, when expenses are less, naturally the profit will be more. Expenses are less in cost accounts in case of under absorption. So the profit disclosed by the cost accounts will be more. This may create difference between profits disclosed by cost and financial accounts. The second reason is the difference in the basis of stock valuation. You remember, cost accounts and financial accounts may follow different systems of valuing stock. In financial accounts, always inventories are valued at cost price or market price, whichever is lower. In financial accounts, inventories are always valued at cost or market price, whichever is lower. But in cost accounts, inventories are valued at cost. So naturally, there may be some difference between the value stock, that is value opening or closing stock in cost and financial accounts. Another probable reason is the difference in the method of computing depreciation. There may be some difference in the method of computing depreciation in an organization using costing as well as financial books of accounts. Okay. In financial books, usually depreciation is charged on WDV basis at a specified rate for different types of assets. For the preparation of financial accounts, the accountants are expected to follow the accounting standards, which prescribes the valuation of fixed assets, especially plant and machinery. The accountants are expected to follow the Companies Act in effect. The accountants are expected to consider the provisions in the Income Tax Act. By considering all these, an organization chooses a specific rate of depreciation for fixed assets, different types of fixed assets. Different types of fixed assets are depreciated at different rates. And the method usually followed, not compulsorily everywhere, usually followed is WDV method, written down value method. But you remember, in case of cost accounts, cost accountants are charging depreciation basically on the basis of the actual usage of the asset. Or the cost accountants may have a technical methodology for charging depreciation, which may be different from that of the WDV. Okay, clear? The cost accountants may apply either depreciation on the basis of actual usage, or sometimes there may be a standardized technical method for calculating the depreciation. So that naturally there may be some difference between the amount of depreciation charged on fixed assets by the cost accounting department as well as the financial accounting departments in the same organization in respect of same assets. Naturally, profits will differ. The fourth point is pure financial items recorded in financial accounts only. There are some pure financial items, transactions, which are not at all considered by the cost accountants for recording purpose. Pure financial items are not recorded by the cost accountants. Pure financial items we have discussed yesterday. You have a very clear idea about such items. You always must remember what are the pure financial items. Some items are expenses, some items are appropriations, some items are write-offs, some items are pure financial receipts or revenue. Say for example, take the case of interest on investment or dividend received. These are pure financial income, usually credited to P&L account. Naturally, the P&L account, the net profit as per the financial account will be more. But these items are not recorded in the cost accounting. So naturally, the profit in cost accounts will be less. When an item of pure financial income is credited to the P&L account in financial accounts, and the same is not recorded in cost accounting books, then naturally the profit in the cost account books will be less. Okay. Then there are certain items. That is the fifth item is there are certain items which are recorded in cost accounts only. There are some implicit costs or notional expenses which are not at all recorded by the financial accountants in their books. Say for example, the rent of own building. Own building. When a business is using own building, the financial accountant cannot charge rent on such buildings. But the cost accountant may consider, not strictly, may consider such notional rent also for the computation of the costing profit. Then the last one may be abnormal loss and abnormal gain, usually recorded by the cost accountants. If there is abnormal gain or abnormal loss, in reality, financial accountants very rarely consider such abnormal profits or abnormal loss or abnormal gain while dealing with the P&L account. Okay, these are the various causes or forces creating difference in the profit between cost and financial accounts. Shall we move on to next? Okay, you are now very clear. You always remember some important points. You should be very strong in simple accounting logics. What are they? Simple accounting logics. One thing is, when expenses in one set of account is more than that of the other, the profit in that set of book will be less. When expenses are more, profit will be less. When expenses are less, profit will be more. When incomes are more, profit will be more. When incomes are less, profit will be less. Okay, moving on to the next slide. Please take down. This is a question. We are starting questions on reconciliation. Giving you 5 minutes for writing down. Okay. Shall we begin? Dear friends, we have to start. Okay. Listen, please. How to prepare a reconciliation statement and what is the logic? In order to prepare a reconciliation statement, there are two alternatives which we have already discussed. One is a reconciliation statement and other is a memorandum reconciliation account. Right? Reconciliation statement or memorandum reconciliation account. In a reconciliation statement, we are starting from the profit disclosed by any one books of account. That means you can choose one which is disclosed by cost accounts or financial accounts. If you are starting from cost accounts, if you are starting from the profits disclosed by cost accounts, we have to recheck the profit disclosed by financial accounts. Okay, the logic is this next. We are starting from the profit disclosed by cost accounts. After analyzing or adjusting all these items, we have to recheck the profit disclosed by financial accounts. So we are moving on to the solution. How to? This is the format usually applied for preparing a reconciliation statement. We are beginning from profit as per cost books. The given value is here, profit as per cost books. Now we have to take the adjustments one by one, items one by one. Item number one, look at your question. What's overhead under recovered in cost rupees 3,120? Whenever you see this, you have to analyze what is Since we have taken the profit as per cost books, you think from the point of view of cost accounts. Remember, our way of thinking should be based on the profit selected. Since we have selected profit under cost accounts as the base profit, we have to think from the point of view of the cost books. Okay? Here, works overhead under recovered in cost is 3,120. What is its impact? You know exactly what is under absorption. Under absorption means nothing. The expense charged in cost account is less. Remember, under absorption means expense or overhead charged in cost account is less. When expense is less, what will be its impact on profit? Profit will be more. Okay. When expenses are less, profit will be more. Where? In cost accounts. In cost accounts, the profit will be more by rupees 3,120. So what to do? Comparing between cost accounts and financial accounts, profits in cost account is more by 3,120. We want to reach at financial profit. From cost profit, we want to reach at financial profits. And the cost profit is more by 3,120. We want to equate the profit under cost accounts and financial accounts. So you have to think what to do. Actually, there are two different alternatives. You can make the cost profit and financial profits uniform or same by applying two operations. You listen here. You look at here. There are two possibilities. One is you deduct rupees 3,120 from cost profit. Okay? You deduct 3,120 from cost profit. If you have selected cost profit as the base, you have to choose this option, that is deduct 3,120 from cost profit. On the other hand, if you have selected profit as per financial accounts as the base, then you have to add 3,120 to financial profit. For better understanding, you stick on the selection of profit as per cost accounts. So remember, when there is under absorption, what to do in the reconciliation statement? The under absorbed amount should be deducted from the profit as per cost accounts. Look at the statement. We have an extended statement. Earlier statement we had only profit as per cost accounts. Now we have one more item, that is the first adjustment, that is under absorption of works overhead. What we have done, you look at the red colored part, it is deducted less. Why it is deducted? It is deducted because the costing profit is more than financial profits by 3,120. Due to this transaction, we want to equate the cost and the financial profits, so that naturally we have deducted. Okay, learn this now. You please, students, learn this now. When you have costing profit as the base, under absorption should be deducted. Whatever be the under absorption, it may be works overhead, it may be under administrative overhead, it may be selling overhead, whatever be, under absorption should be deducted from cost accounts profit. Okay, clear? Under absorption should be deducted from the profit as per the cost accounting books. Okay, now we are moving on to the second item, that is administrative overhead recovered in excess rupees 1,700. Whenever you see administrative overhead recovered or absorbed, this is applicable to cost books. Okay, the recovery, absorption, all these are applicable to cost accounting books. So, in cost accounting books, administrative overhead is recovered in excess by 1,700. That means over absorption. We have absorbed more. 1,700 rupees is absorbed more in cost books than in financial books. Got it? 1,700 is 700 more is absorbed or debited to the costing P&L account. 1,700 rupees more is debited to costing P&L account. So naturally, what happens when there is more debit to the costing P&L account? What will be the effect on costing profit? The profit will be less. When there is more expense, when there is more debit to costing P&L account, the profit will be less. So the profit disclosed by cost account is lower than that in financial books by rupees 1,700. And profit is less in cost accounts. How to equate the profit in cost accounts with that of financial books? You think about it. When profit is less in costing books, then we have to add it. There are two alternatives. If you have adopted costing profit as per the base or as the base, then you have to add this over absorption along with the costing profits. So you see the third item in the reconciliation statement, and over absorption of administration overhead. Okay, now you have learned two things. One is when there is under absorption of any overhead, it must be deducted from costing profit. It must be deducted from costing profit. On the other hand, when there is over absorption of administration overhead, over absorption of administration overhead, it must be added. What is the logic? Why it is added? Because costing profit is less by 1,700 than financial profit. Okay, so that we are adding 1,700. Okay, I think you are clear with this. Remember, under absorption must be deducted from costing profit, and over absorption should be added with the costing profit. Okay, moving on to the next item. We have two similar items regarding depreciation. That is, depreciation recovered in cost books, rupees 12,500, and the same in financial books is 11,200. Same thing is given. In two books, two figures are charged. So you have to compare. In cost books, it is 12,500, and in financial books, it is 11,200. So cost books is charging more depreciation than in financial books. Okay, cost books is charging depreciation than that in financial books. What is the difference between these two figures, 12,500 and 11,200? The difference between these two is 1,300. The amount charged or recovered is greater in cost books. So it is over recovery of depreciation in cost accounts. Over recovery of depreciation in cost accounts, it is 1,300. When there is over recovery is equivalent to over absorption. Over recovery must be okay. Rupees 1,300 should be added to the costing profits. Remember, here it is. Here there is over recovery of depreciation in cost accounts. That over recovery should be added, because in cost accounts depreciation is charged in excess by 1,300. as compared to financial books. So naturally, the profit disclosed by cost accounts, when it is less, it is to be added. When profit is less, it is to be added. When profit is to be deducted. That is the logic. Okay. Clear? Adjustment number 4. Interest on investment. Interest on investment. Whenever you see this particular item, you have to remember your financial items. And interest on investment is an income. It's an income. Remember, on investment, it's income. Income received. A pure financial income received is recorded only in financial books. That means pure financial income received, that is the interest on investment, is credited to the P&L account. That is the meaning. Technically, interest on investment rupees 8,000 was credited to the P&L account prepared by the financial books, but that is not recorded in cost accounting books. That cannot be recorded. That is not at all considered by the cost accountants, because it is a pure financial transaction. An item of income is credited in financial books. That means financial profit is more and costing profit is less. When profit disclosed by the costing books is less as compared to financial, then what to do? It is to be added to the costing profit. Rupees 8,000 should be added to the costing profit. Clear? When there is a pure financial income, it is normally credited to the P&L account prepared by financial accountant, not considered by the cost accountant. An item which is credited in financial P&L account is not credited in costing P&L account, means the profit in the costing P&L account will be less. So naturally, you have to add this 8,000 to the costing profit in the reconciliation statement. Okay? Are you doing it? I think you students are filling up your reconciliation statement. While discussing this, you can add or less according to my instructions. Okay. So now we have reached up to the fourth adjustment. Now we are going on to 5 and 6. 5 and 6 are taken together. Dear students, you have to record. You have to record in your book, in the reconciliation statement, this. Not only listening, you have to, along with listening this talk, you have to do this. Okay, then 5 and 6 are similar. Loss on obsolescence in financial accounts, 5,700. Then income tax provided in financial accounts, 40,300. Why I am saying that these two are similar? Why these two are similar? Why these two are similar? Because these are actually debited to the profit and loss account in financial accounts. Am I right? You think about it. You think about a profit and loss account. Loss on obsolescence in financial accounts, it is debited to P&L account in financial books. Similarly, provision for income tax is also debited to the P&L account. So both these are debit to P&L account, but not considered by the cost accountant at the time of preparing the profit and loss account or income statement. Not taken into account. These are pure financial transactions in the nature of expense. One is a loss and other is a provision for tax. Okay? So naturally, some expenses are not recorded in cost books means the profit in the cost books is more. Okay, once again, when some expenses are not recorded in the costing books, the profit disclosed by the cost accounts will be more. Profit is more in cost books, so we have to deduct. Sorry, there is a correction in the slide. These items are to be deducted from the costing P&L account. Okay, here it is written as added. These are to be deducted because expenses are not debited to costing P&L account. Naturally, the profit is more. When profit is more, the items are to be deducted. This 5,700 and 40,300 must be deducted from the costing P&L account. Okay, you make a correction. In the slide in red, I have written both these are to be added. It is not right. Both these are to be deducted from the costing P&L account. Costing profit, not P&L account, costing profit. So moving on to the next 7 and 8. 7 and 8 are also similar. One is bank interest and transfer fees received in financial accounts. Bank interest and transfer fees. Transfer fee means what? It is the fees charged by a company for transferring the shares by a shareholder to the other. It's a very nominal revenue from the part of the company. So naturally, it is credited to the P&L. Likewise, bank interest received. That is also, bank interest here means bank interest received. Both are received. When bank interest and transfer fee are received, they are income. Then stores adjustment credited to financial books. That's a profit. Stores adjustment credit. Credit means that's a profit. Both these are profit or income. Actually, the term income is not applicable in case of the second one, but it is profit. Both these are credited to. These are taken together because both these are usually credited to the P&L account, where P&L account prepared by the financial accounts. These two transactions have been credited to the P&L account in financial books, but they are not credited in costing P&L account. They are not recorded in costing P&L account. When two items of incomes are not credited in costing P&L account, what will be its impact on the costing profit? That is the question. You have to think about that. When two items are bank interest and transfer fee, bank interest and transfer fee are really income, not profit, it is income. Stores adjustment credited in financial book is a book adjustment, not a realized profit. While valuing the stores, that is the inventories, some adjustments are usually made in the books of accounts when there is a credit. Credit means value of the stock increases. Okay. So whatever be it, these are credited to P&L account. When there is a credit in P&L account prepared by the financial accountant, the financial profit will be more. That means naturally the costing profit is less as compared to financial profit. Okay, the cost student was very good. When there is a credit in financial P&L account, profit disclosed by the financial profit and loss account will be more. That means profit disclosed by the costing P&L account is less. When The profit as per costing P&L account is less. What to do? We want to reach at a higher profit. Higher profit is financial profit. From a lower profit, that is costing P&L account, we have to reach at a higher profit. So we have to add. Add both these. Both these are to be added in the cost, along with the costing profits. Okay, and the students, these two items, always remember, these are recorded only in financial accounts. So they are pure financial items. They are credited to P&L account in financial books, not recorded in the costing P&L account. So naturally, the profit disclosed by costing profit and loss account is less. Thereby, these items are to be added. Okay, moving on to the last one. That is loss due to depreciation in financial accounts only. Rupees 6,750. Loss due to depreciation in financial accounts. Loss due to depreciation in financial accounts only. 6,750. An item of loss is debited to P&L account in financial accounts only. That means it is not recorded in or not debited in costing P&L account. This item is not debited in costing P&L account. An expense is not debited in costing P&L account. The profit disclosed by the cost account will be when an item of loss is debited, not debited in costing P&L account. Is not debited in costing P&L account. The profit will be more. So here again, one more correction. Costing profit is more, so the item should be deducted. You please make a correction. It is not added. The item should be deducted from the costing profit. It is to be added with the financial profit, but we have taken costing profit as the base, so the item should be deducted from the costing P&L account. Make correction, please. The last one, the red sign, that is hence the item should be added. It is not really added. It is to be deducted. So the 6,750 should be deducted from the costing P&L because the costing profit is more. Okay. I think your reconciliation statement is complete. If you were actually really following me by listening and writing, you have a reconciliation account with you. It will look like this. Look at this. Yes, students, you can verify the reconciliation statement with that of yours. From the costing profit, we have reached at the profit as per financial books. Okay. I have recorded these transactions in the order, that is in the order of question. But you may be able to rearrange it. This is only for the first real-time experience. You can arrange it. That means items to be added can be placed in a particular place. Items to be deducted should be placed in another place so that you can take the net difference and come at the profit as per the financial accounts. Since I am not, I can't see exactly you. I can't use a blackboard or a whiteboard. It is the only possibility. While practicing, you have to follow the method. That is, you identify the items to be added first. They are all of them must be placed in as a bunch. Identify the items to be deducted, put them as another bunch, and transfer the total to the the final column and take the net result, that is the profit as per financial account. I think now your reconciliation statement, the first reconciliation statement is over. You should have this reconciliation statement. You have to complete this reconciliation statement so that we can go to the alternative method of reconciling, that is memorandum reconciliation account. If your reconciliation statement is complete, then we can easily go on to the memorandum reconciliation account. Okay, you know exactly what is a memorandum reconciliation account. That may be a short question. Okay, remember, what is a memorandum reconciliation statement? What is a memorandum account? Any idea about it? What is a memorandum account? Some accounts are, very few accounts are titled as memorandum. Memorandum accounts are actually not forming part of double entry system of accounting. These accounts are actually prepared only for some calculations, only for some clarifications, not forming part of the double entry system of accounting. That's why we call them as memorandum. It's only a temporary account. When we are preparing memorandum reconciliation account, it is only for reconciling the profit of cost and financial profits. The purpose will be over there. Okay, a memorandum reconciliation account is a memorandum account or a temporary account prepared to reconcile the profit disclosed by cost accounts with that of the financial accounts. Memorandum reconciliation account is a temporary account, or it is a memorandum account prepared for reconciling the profit disclosed by cost accounts with that of the financial accounts. Remember, this is also a short question asked several times. Okay? Are you clear? Shall we move on to the memorandum reconciliation account? You must have this reconciliation statement with you. Okay, you see, memorandum reconciliation account is like a normal C form account. You have to learn the logic, how to prepare this. It's a simple logic. You look at the left side, first item, or the right side, first item. What is the first item on the right side? Net profit as per cost ledger or cost accounts. Okay? So remember, if you have to put the net profit as per cost accounts on the right side, then you look at your reconciliation statement. What are the items added there? What are the items added there? All items added in the reconciliation statement, or all items to be added with the cost accounts are to be credited. Okay, all items which are to be added with cost profit are to be credited. Administration overhead over recovered, depreciation over recovered, interest and investment credited to financial account only. Then bank interest and transfer fee credited in financial account only. Source adjustment credited in financial account only. All these are items added in the reconciliation. So items that are to be added with the costing profits are to be credited. And items that are to be deducted from costing profits are to be debited. So naturally you will get a balance figure. Right side, last one, net profit as per financial accounts is the balance figure. It is not taken from the question, it is actually the balance figure. If the balance figure agree with the net profit as per financial account given in the question, then your question is right. The answer is right. Okay. We have studied the preparation of reconciliation statement as well as memorandum reconciliation account. Shall I move on to the next one? We have only 6 more minutes. I have one more question with me. I have given some questions along with their answers in PDF format to the ASAP organizers. Questions and answers in PDF format is also given. You can collect it. One more question we have to look at it. Okay, look at the solution of this question. Here also I have started from profit as per cost accounts. How to listen to this. Under recovery is deducted. Under recovery of works overhead and administration overhead both are deducted. Over recovery of selling overhead is added. Over valuation of opening stock in cost. Over valuation of opening stock in cost. You remember, you listen the logic of this, because this is quite complicated. When opening stock is small, that means debit in the trading account is small. Debit in the trading account is more means less is the GP and less is the net profit in cost accounts. So we have added it. Once again, when operating stock is more in cost accounts, profit will be less. So it is added. Then all closing stock in cost. When overvalue. Closing stock is credited. So naturally, when there is more credit, more will be the profit. When more profit is there in cost accounts, it is to be deducted. That is why the overvaluation of closing stock is deducted. And then we have bad debts written off, debited in financial accounts only. This is a very important item. Bad debt and preliminary expenses written off in financial accounts. When some items are debited in financial accounts only, the profit in cost account will be more. So naturally deducted. Okay, my dear friends, students, please listen. I have given some questions to the ASAP support faculty members. You can collect it. If you have some queries, if you have some doubts, if you want my support, you please write down my email ID. You can contact me. Are you ready? My email ID is AJK Anthony Joseph K AJK SBC, second letter B C @gmail.com. AJKSBC@gmail.com is my email ID. You can contact me. You can clarify your doubts. If you want some more questions along with solution, I can provide it. So I wish you can raise some questions to me. Okay. Thank you for listening to me. Thank you.
Sir,
നമ്മൾ ഇതുവരെ reconciliation statement നേരിട്ടുള്ള simple problems ആണ് നമ്മൾ ഡീൽ ചെയ്തത്. Now you can see some more big questions. You anticipate questions like this. This is actually not a too big, too complicated, but this can be a bigger question for your exam. That is, from this question, you are required to prepare profit and loss accounts in cost accounts, then reconcile the profit disclosed by cost accounts with that of profit in financial accounts. Here we have a P&L account under the financial books. From the additional information given, you are to prepare a cost sheet and then make a reconciliation. So naturally, it can be a bigger question. That is the section C or D, and as the case may be. Okay. So we must learn these also. This can be useful to you. You can have a look at the items in the P&L account. Amount we can verify. Opening stock we have, materials consumed, wages, then gross profit, closing stock, sales. These are given along with units. Note it down. Then factory overheads, administration, selling expense, bad debt, preliminary expenses, and so on. While watching this, you remember these bad debt and preliminary expenses. These are actually not recorded in cost account. Credit side, we have interest and rent received. These are also not recorded in cost accounts. The closing stock and opening stock are there. The value may be different in cost accounts. Factory overheads, administration overheads, selling overhead, the value given or the amount given in the financial books may be different from different in cost books. We have given the cost of materials rupees 104 per unit and the labor cost rupees 60 per unit. That is a standardized rate. Factory overheads are absorbed at 60% of labor cost. At administration overheads related to production activity at 20% of factory cost. Selling expenses are charged at 24 per unit. 24 per unit means 24 per unit sold. That is important. That is very important. The opening stock of finished goods is valued at rupees 180 per unit. Here we have finished goods also. So we are moving on to, you can have a look at the cost sheet. Direct materials consumed. Consumed is 10,000 units. Rate is given as 104. So cost of material is 10,000 into 104. Direct wages 10,000 units. That is the finished product produced is 10,000 units multiplied with the cost per unit 60. So we have prime cost. We have to calculate the factory overhead. Factory overhead is 60% of prime cost, 60% of 6 lakh, that is wages. It is given in the question. Factory overheads absorbed at 60% of wages. So wages is 6 lakh. So factory overhead is 60% of 6 lakh, that is 3,60,000. Then you compare the factory overheads here with the factory overhead in the question. Then you can see whether there is under absorption or over absorption. That should be the methodology adopted. Then we have factory cost. Factory cost is the sum of prime cost and factory overhead. That you know well. So administrative overhead is 20% of this prime cost. That is 4 lakh. Now we have cost of production. Along with cost of production, we add opening stock of finished goods. The value of opening stock per unit is given in the question. It is 180. It is given in the question. It is multiplied with the number of units. That is also given in the P&L account, 500. So 500 into 180. Actually, the value of the opening stock is given in the P&L account in financial books. You have to compare this value with that, whether there is any undervaluation or overvaluation. If there is any difference, that should be reconciled. Then you have to deduct the closing stock of finished goods. We were having 500 units as opening stock. We had produced 10,000 units. That is actually computed from the figures. You might have studied while preparing or while studying the cost sheet. So naturally, 10,500 was the total number of units available for sale. Opening stock plus production during the year was the units available for sale. This figure was actually not given. It is calculated, and the closing stock finished goods is given in the. It is given, and the units is given in the P&L account. It is 250 units. So you can see the cost of goods available for sale and the cost of production. You remember that cost of finished goods, closing stock of finished goods is valued at what rate? At the current year's cost of production. How much is the current year's cost of production? It is given in the statement. Current year's cost of production is given in the statement. So for 10,000 units, you have the cost of production. Cost of production was 24 lakhs. For producing 10,000 units, the cost was 24 lakhs. So the closing stock can be calculated by applying the rule 24 lakhs divided by 10,000 into 250. You will get the value of 250 units. This you might have studied while preparing the cost sheet several times. Okay, you have cost of goods sold now. That is, from the cost of goods available for sale, you have deducted the value of closing stock of finished goods. You got cost of goods sold. Along with that, you have to adjust the selling and distribution overhead. We have sold 10,250 units. Have you got this 10,250 units? Actually, we have sold, in the question, it is stated that we have sold 10,250 units and 250 units as closing stock, 500 units as opening stock. We have three information. One is number of units sold, number of units of closing stock, and number of units of opening stock. You can calculate the units produced. Here it is not required. The units sold is given as 10,250, and selling and distribution overhead per unit is 24. So the selling and distribution overheads recovered is 24 into 10,250 units. So you have cost of sales. You have cost of sales. It is 26,76,000. The value of sale is given as 28,70,000. Sale is given as 28,70,000. You have cost of sales 26,76,000. So naturally the profit is 1,94,000. The difference between sales and cost of sales is the profit. So students, please remember, you have to look at compare each and every item given in your question in P&L account with that of the cost sheet here prepared by you. Direct material, you compare whether the material consumed here and there are same. And direct wages, you compare. When there is some difference, that must be incorporated in the reconciliation statement. Factory overheads, it is in cost sheet, it is the absorbed value, 60% of 6 lakh. 3,60,000 is the factory overheads absorbed. You compare it with the factory overheads in your P&L account. Similarly, compare administration overhead, then selling overhead, then compare the value of opening stock and closing stock. Whenever there is a difference, that must be brought to the reconciliation statement. So we can move on to the reconciliation statement. Okay, see the memorandum reconciliation statement. This is actually memorandum reconciliation account, otherwise known as memorandum reconciliation statement. here it is, here the profit as per financial records is taken as the base. It can also be taken as the base. Then items credited will be the items to be added with financial reports or to be deducted from cost books. നമ്മൾ ഇവിടെ ഇതുവരെ ചെയ്ത പ്രോബ്ലങ്ങളിലൊക്കെയും കോസ്റ്റ് പ്രോഫിറ്റ് ആണ് നമ്മൾ എടുത്തിരുന്നത് ബേസ് ആയി. ഇവിടെ ഇപ്പോൾ ഫിനാൻഷ്യൽ പ്രോഫിറ്റ്സ് ആണ് എടുത്തിരിക്കുന്നത്. അതുകൊണ്ട് ഫിനാൻഷ്യൽ പ്രോഫിറ്റിന്റെ കൂടെ ആഡ് ചെയ്യേണ്ട ഐറ്റംസ് എല്ലാം നമ്മളിവിടെ ക്രെഡിറ്റ് സൈഡിൽ കൊണ്ടുവരും. ഡിഡക്ട് ചെയ്യേണ്ട ഐറ്റംസ് എല്ലാം നമ്മൾ ഡെബിറ്റ് സൈഡിൽ കൊണ്ടുവരും. ഇതേ സാധനം തന്നെ നിങ്ങൾക്ക് തിരിച്ച് ചെയ്യാം. അതായത് ഇവിടെ ക്രെഡിറ്റ് സൈഡില് പ്രോഫിറ്റ് ആസ് പെർ കോസ്റ്റ് റെക്കോർഡ്സിനെ കൊണ്ടുവന്നാൽ ഇപ്പോൾ ഡെബിറ്റ് ചെയ്തിരിക്കുന്ന ഐറ്റംസ് എല്ലാം എന്ത് ചെയ്യണം? ക്രെഡിറ്റ് ചെയ്യണം. ഇത്രയുള്ള കാര്യം. നമ്മൾ ഐറ്റംസ് എന്തൊക്കെയാണെന്നുള്ളത് നമുക്ക് നോക്കാമല്ലോ. നോക്കൂ, നിങ്ങൾ അതിന്റെ ഡെബിറ്റ് സൈഡിൽ നോക്കിയാൽ നിങ്ങൾക്ക് കാണാം ഇൻട്രസ്റ്റ്, റെന്റ്. ഇതെങ്ങനെയുള്ള ഐറ്റമാണ്? ദീസ് ആർ യുവർ ഫിനാൻഷ്യൽ ഇൻകം, അല്ലയോ? കോസ്റ്റ് അക്കൗണ്ടിംഗ് ആണ്, പ്രോഫിറ്റ് ആണ് ബേസ് ആയിട്ട് എടുത്തിരിക്കുന്നതെങ്കിൽ ആഡ് ചെയ്യും. അതുകൊണ്ടാണ് കോസ്റ്റ് റെക്കോർഡ്സിന്റെ സൈഡിൽ നമ്മൾ എഴുതിയിരിക്കുക. ഉണ്ടാവും പ്രോഫിറ്റ് ആസ് പെർ കോസ്റ്റ് റെക്കോർഡ്സിന്റെ സൈഡിലാണ് ഇത് എഴുതിയിരിക്കുക. അതേസമയം ഫിനാൻഷ്യൽ പ്രോഫിറ്റ് ആണ് എടുക്കുന്നതെങ്കിൽ നമ്മൾ അതിനെ ലെസ് ചെയ്യും. അപ്പൊ ഇവിടെ നമ്മുടെ ക്രെഡിറ്റ് സൈഡില് പ്രോഫിറ്റ് എഴുതിയിട്ട് ഫിനാൻഷ്യൽ പ്രോഫിറ്റ്സ് എഴുതിയിരിക്കുന്നത് കൊണ്ട് ഇവിടെ ഡെബിറ്റ് ചെയ്യും. Don't be confused. We have to take into account the interest received because it is an item of income credited in financial profits only. Rent received, that is also similar, credited in P&L account. And then you have to compare the value of opening stock and closing stock. Opening stock, in one statement it is 90,000 and in another statement it is 70,000. So you have to take into account this. Then selling overhead. In one statement it is 2,46,000 and in another statement it is 2,20,000. So naturally the difference is 26,000. It is added with costing profit. Then another item, bad debt written off, preliminary expense. These are items appearing in financial books only. That is items debited in financial books only. Then two items are under recovered or under absorbed, production overhead and administration overhead. From where we get it? We have to compare the production overhead as per the cost sheet with that of the P&L account. You can see whether it is under absorbed or over absorbed. Since it is under absorption, these are put here. Also, there is a slight difference in the value. In cost sheet, in financial P&L account, the value of the closing stock is. In costing P&L account, we have calculated value is the value 50,000 and 50,000. The difference is actually adjusted in the reconciliation statement. Students, please, if you are in need of these questions, these questions along with solutions, or if you want to make clarifications, you please make a request in my mail ID. I have already told you about my mail ID. It is ajksbc@gmail.com. ajksbc@gmail.com. Thank you, my dear friends, for listening to me.
Please explain overvaluation of opening stock in cost accounts എന്നൊരു ക്വസ്റ്റ്യൻ വന്നിട്ടുണ്ട് സാറേ.
Okay. Overvaluation of opening stock in
cost accounts.
Overvaluation of opening stock in cost account means the value of the opening stock in the cost account is more than that in the financial account. So for example, Value of opening stock in cost account is 50,000. Okay. Imagine value of opening stock in cost account is 50,000, and the value of same opening stock in the financial books is only 47,500. Now the first question that can be raised is why this difference on the same thing? It is because of the method of difference in the method of valuation. Okay. The difference, the value of the opening stock, as per my example, in cost account was 2,500 more than that in financial accounts. That is what is overvaluation of opening stock in cost accounts. Now we have to think about the impact. Whenever you think about the impact, you must have a clear idea about the base profit you have selected for preparing the reconciliation statement. Always remember to select, you have to remember the base profit you have selected. Suppose you have selected the profit as per cost account as the base, and the value of opening stock is more by 2,500. That means the debit given to the costing P&L account is, am I right? Debit given to the costing P&L account is more. When debit is more, profit will be less. If due to valuation of opening stock, profit will be less. In cost account, profit is. That means in financial account, profit is more. So we have to reach from less to more. What to do? Add it. We have to reach from the profit, lower profit to the higher profit. Lower profit, higher profit is reported at financial books. So add it to reach at the higher profit. Suppose if you are selecting the financial profit, then financial profit as the base. Here also costing profit is less. So naturally, from the financial profit, you have the undervaluation to reach at a lower. Okay, I think your doubt is clear. Raise more and more doubts. Okay. Next.
Sir, where a question, sir? If profit of both books are not given, how will we compute?
Yes, definitely. If profit of both books are not given, there are some questions. There are some practical problems like that. I have one question to put at the last slide, but I was not able to. I'm not able to present it. You may be given information regarding cost books and financial books. You are to prepare a P&L account as per financial books and an income statement or a P&L account as per cost books. Compute the profit separately by preparing financial accounts or by preparing the P&L account with the help of the information given, and a cost sheet for a costing P&L account with the information given. Then you must be very clear. In costing books, overheads are absorbed values of overheads are taken. In financial books, actual expenses are taken. So some items, you know that there are some pure financial items which are not at all recorded in costing books, which are recorded in financial books only. Keeping in mind all these principles, you are to make a costing P&L account and a financial P&L account, find the net profit, and then prepare a reconciliation statement. That is the thing. Okay.
One question on the sir.
Pardon.
Interest earned during the year is given in the question. How can we know whether it is credited in cost or finance account?
Okay, it's a good question, a simple, basic question. You remember, always remember, you have to understand pure financial items. What are the pure financial items? Whenever you see interest, whether it is paid or received, these are pure financial items. Interest earned means interest credited to financial pay and account. Always remember this. Interest earned is a pure financial income. It need not be stated whether it is credited to P&L account, in financial account or cost accounts. No need, because we have to learn exactly what are financial, pure financial items. I have given all possible examples in last day's presentation. Okay. Are you satisfied? Okay, then thank you so much. Support is.
Yeah. Thank you, sir. Thank you.